Hey everybody, President Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending October 23rd, 2015. Um, it was a really interesting week this week. It was kind of strange, but I guess I like the term October or Rocktober because certainly this week we ended it on a strong note. But there were a couple of strange things that were going on, and I'm going to go through them here in a bit. But you know, the week started off relatively quiet, and then we've got on Thursday and Friday. Thursday it kicked off with Super Mario Draghi. Super Mario is what we like to call him from the ECB. Came up with possibly taking another look at their stimulus over in Europe, and that kind of started things going. And for those of us and our members, I was encouraging shorting the euro, and it turned out to be a great trade for us because the euro just totally the floor fell out in the euro, and I still think it can go lower, but we'll take a look at the charts in that in a minute. But anyway, they kicked it off, and then if that wasn't enough to set the tone on more quantitative easing, China came out and cut interest rates by about 25 basis points. So they really strong finish to the week. And then on top of that, we had really some very strong blowout earnings from a couple of large tech companies, which was, just added more sweet music to the ears of a lot of folks. We had very strong earnings from some of the old stable large tech firms like Microsoft. They were up huge on the day. We saw Amazon up over 6%. Microsoft was up over 10. Google was up a pretty good bit. And then in sympathy for some of these, Facebook, they got earnings coming up, but they were up. So it seemed like a very strong day for tech. But we had some that just weren't, writing or playing from the same sheet of music. We had some poor numbers from IBM and Caterpillar and a few others. So it's still kind of a mixed bag here with the earnings season. We got another strong week coming up as well. So we just got to pay a lot of attention to that. But this upcoming week could probably, I think it promises to be as exciting, if not more so, from a price action perspective as this past week, because we've got the FOMC and the U.S. Feds coming up, and there's all eyes are now going to be on Yellen and what is she going to do. And the communication to the financial markets, Yellen and her Fed governors, the voting members anyway, they've been very, very, I think, poor. Some saying they see rates going up this year, some saying they don't. They think they should be held off. So in a lot of respects, Yellen is going to try and herd cats here and come up with a cohesive statement. And we're going to see that this coming week. That will have the tendency to really rock the markets if there's some surprises coming out. Right now, most people believe they're going to hold off on raising the rates this year out until 2016. But if she comes out and still says the data that we're reading, the economic data out of the U.S. seems to indicate that we're still on, we don't see anything that can prevent us from raising the rates before the end of the year, I think it could have a negative consequence on the market here in the U.S., which in turn would have a negative consequence on markets around the globe, primarily Europe, and then over in the Asia Pacific area too. So what I've got on the screen here, I just want to show you a couple of things. I've got the weekly chart of the futures up here, and I've got this fib placed here from the pivot high and the pivot low from the 2007, 2008 into 2009 crash, and you can see the crash here. So I've got this pivot low, and you can see here I like to use 0.236, which is it's not an official fib node, but a lot of people, I like using it because it is a good, solid pullback point, and it's been very reliable in very strong markets. And you cannot argue that we haven't been in a strong bull market since the bottom in 2009. We've moved up very strong. 2011 was the only year that had a little bit of a blip in it. You can see there's between the hash marks here was 2011, and you could see we had a very strong pullback in 2011, but 20%. But then we quickly erased that going into 2012, and then it has just been a rocket shot straight up all the way until about the middle of August, when we gave it all up in literally 3 days. And now we're right back up in this area again here. So a lot of this is, you can thank the central bankers for moving the rates up like, or moving the asset prices up like this. And I've heard so many people talking about asset bubbles. I don't believe we're there yet, but you just never say never. But let's look at this, and you can see here we came back down to this area right here, almost touched the October lows of 2014. And when you think about it and you step back, the 2015 has not been a good year for the markets. I mean, we just broke above green on the S&P 500 this Friday, and so you could essentially say we're flat. And Nasdaq looks like it's close to making all-time highs if it continues that rocket ship blast that it's had this past week. I'll show you the charts here in a minute, but I'm a little bit leery of some of this move. And we saw on Friday an interesting dynamic play out in the volatility futures market, where we've reverted back to a normal term structure in volatility futures, which is contango. However, we've got the VIX, although it was relatively flat on Friday, the vol futures for November were up, about 50, 60 cents. So normally you do not have volatility maintaining or even rising the futures when you have a big, strong move like we had on Friday in the markets. So that tells me that the markets are still concerned looking 3 to 4 weeks out. Okay, still very concerned about what the Feds are going to do, how earnings are going to finish up, and what's going to happen in China. So there's still a lot of fear out there. So we got a lot of premium out in the option market, and the market makers are putting that premium in out there because they're just not that convinced yet that the markets are going to settle into a normal November, December, year-end Christmas rally kind of thing. So right now, as you can see, I'm looking at the weekly chart of the S&P 500 futures here. And if we look at this, and let's just zoom in, you can see, as I said, the 23%, and then boom, we bounced up. Now, if we take it in a little bit tighter, and we look at the weekly chart here, you can see here, and for our members, this was an intraday low. I look at it more like in this area right here, like that was kind of where we closed or where we finished up. And you can see we had that huge bullish divergence. And on that double test right there, we were starting to pick up some longs in this area here. And we had a volatility play where we were playing volatility to the downside, and we just made some very good money. And a lot of people were making up for this big push down right here, but we made some very good money in this run up right here. But you can see this rocket ship on this daily chart. We're way up in this area here. I mean, I fear that we're going to have another little pullback, probably scare the kids a little bit. But I think this bottom is in for now. I don't see anything that can take that out on the near-term horizon, short of any extremely bad news coming out of China. But we've also seen that the central banks in China, the PBOC, that's the People's Bank of China, or the ECB in Europe, or even Janet Yellen and the dovish Fed voting members here in the U.S., they're going to pull out all stops to keep these markets up, all right? And that means that I believe that we pretty much got this established right here. So any pullback is going to be a normal profit-taking mode, and then boom, we're going to probably come up in that area there, giving us like an Elliott wave 3, 4, 5 kind of pattern. Now, will we take out the 2134? Possibly. If Yellen comes out and says we're not going to raise rates this year, or they hint at we may do it in December, depending on how the data looks, and let's say they don't do it in December, I think we're going to take out 2134 and move higher. If they do raise the rates, I think we're going to be somewhere down in this area right here. But keep in mind, I think it'll be a momentary thing, and then the markets are going to start back again, because it's only 25 basis points. And if you think about it, we've been at 0% for what, 5, 6 years or so? I mean, just a long period of time. And 25 basis points in the scheme of things is nothing. It's more psychological than anything else. So when they do raise, I think you're going to see the markets pull back and come back like this. But then I'm going to be a buyer on that pullback because I do believe we'll probably get a base here and then it'll go back up again. It's more of a psychological impact, as I said, than anything else. Okay, so this is what we're looking at here. The other thing I will show you on here is for 2015, and let me just box in 2015 here. This is the line for 2015, okay? And so going forward like this, we had two major support points right here. This bled over from 2014 to 2015 right here. That's one major support point. And then, but the primary is right in this area right here. And we just took that out on Thursday and Friday. I didn't think we could take it out that easy, but it shows you what central banks can do. And then boom, we came up here in this area here. So call it right around the 2040 area right here. So that is naturally going to be a support zone should we have some profit taken, a little bit of a settling of price, because obviously we can't maintain this trajectory for very long. And whether it's up or down, it's more of, I think a lot of this was short covering. I think there were some new longs in the market at this point right here, but not a lot of them. And the higher we go, the less you're going to see longs willing to commit. As we come up to the Fed meeting this next week, I think we're going to get some commitment in shorts or longs, depending on what comes out of that policy making committee there. So you can see these two major support zones right here for 2015. One is down in this area right there, and you can see where it provided some support or resistance for quite some time until they finally punched through in the past couple of weeks with this final move there. That's located at 1980. So my point in all this is we've got two numbers you guys got to watch for on the downside, 2040 and 1980. So I think any pullback, we could possibly penetrate 2040, but I don't think we're going to penetrate 1980. Should we do that, then that means there's more bad news out there, and we're going to probably come down a pretty good little bit. Okay, so that's how I'm looking at the E-minis right now. The other thing I'm going to point out is that we did take out that 200 EMA. We sat there for about 4 days, right? And we took it out. And we also, if you could look at the trajectory of the 50 EMA, it's now pointing back up. We had that, what's known as a death cross in technical circles. And we had this death cross. And I always say whenever you get a death cross, just go long because the odds favor a bounce back towards the cross. And that's exactly what we got right in this area here. And then we had a double test down here and then off to the races we go. And now we're back up here. If we can hold it above that level, we're going to get this back to the upside, which will be good, which is the way we've got it now sitting in the NASDAQ, which obviously was up very strong due to strong earnings with those companies I talked about earlier. Okay, so that's kind of where we're sitting on the E-minis now as I speak. If we come in here and we look at the NASDAQ, which is the strongest one of the batch. And you can see here on this daily chart with NASDAQ, I mean, I'm going to just take a lot of my indicators off the screen. I mean, so it's just a clean chart here. I mean, you can see here just how strong, that's the all-time highs with NASDAQ futures. We're almost there. You can see here that the 50 went below the 200 for maybe 2 days. 3 days tops, and then it just almost, looking at this chart, looks like it kind of skimmed. And now we're both getting an upward track on both of those indicators. And you can also see that as we move higher, there's not going to be any bearish divergence in this area here. So that's solid, guys. It's a good move, and I believe that should we get good news out of the FOMC, we're going to make new highs here. Now, as long as the NASDAQ's making new highs, and a lot of this is on those great earnings reports that we saw out of Microsoft and Amazon and Google, just very strong. And then we got Facebook coming up pretty soon. It'll be real interesting to see how they play it out. But this is where we're sitting right now. I would not be surprised, though, to see a little bit of a pullback, a little bit of rest. I think the markets need to kind of digest this move here. I was expecting a kind of a digestion of the move on Friday, but you know, when we had China come out and say what they said with the 25 basis point interest rate cut, that continued to goose the markets. Now, the only market that's really not participating right now is the Russell futures. If we look at the Russell futures, I've got all my indicators on here. You can see here, but let me just clean it up for you. Look at this. I mean, yes, we had the bullish divergence down there. We had a nice kind of a double tap right there. We got boom. That was the signal right there to say, hey, let's go long. We have the death cross, but look at the separation between the 200 and the 50 EMA. You know, it's still pretty wide, right? And we're flat right here. We're not going anywhere right now, and we need to see small and mid caps. So there's still a lot of money on the sidelines, and until we can take out that 200 and get the rut back up into this area here, let's call it the psychological barrier of 1200 right there, which is that you can see this right in that area there where we have the support, strong support. I can just extend it all the way over here like this. My lines aren't that straight, but you can see. Until we can get back up in that area, any rally is going to be sold off, which is going to keep overhead resistance on all the other markets as well, right? I mean, we need participation in the small and mid cap to show that money is starting to come in. Okay, instead of being holed up by just a few companies. Now, one thing I do want to show you is volatility here. The VIX actually finished up 1 penny, but the November futures, this week we had a roll from the October to the November futures, and November futures were up 57 cents, guys. And so almost 3.6%. And it's just, it's and NASDAQ volatility, the volatility in the NASDAQ market was up almost 6.2%. Very volatile, big move up. Now, one thing that just kind of drowned everybody out, I'm going to show you this right here. In a period of about 3 days, we went from the lows right down here of about 14.5 all the way up to 53.29, right? In 3 days. It was the largest volatility move in the history of the markets in 3 days. Vol has been higher than 53.29, which I'll show you. But a 3-day period, I mean, it just caused a lot of margin calls. It called a lot of folks credit spreads to get flushed. I mean, it really did a lot of damage to a lot of folks. Now, folks are making it back, but it did a lot of damage to a lot of folks. Up in this area here, we were shorting volatility, and you can see how vol has been moving back down. Anytime vol gets up in this area, you want to be looking at shorting volatility. I mean, that is the high probability trade. And remember, in the vol market, the symbol is VX. It's $1,000 a point, right? So even if you didn't catch the peak up here, even if you got somewhere down in this area here around 48, I mean, right now we're sitting, this is not the volatility futures, but it's very similar. You would be sitting somewhere down around 16 or so. You're looking at what, 32 points. So $32,000 in a very short period of time per contract. For one contract. So we love shorting volatility up at the higher zones up here, whether you do it playing a reverse like XIV, there's no options, you do it that way, or you do VXX or some of those other instruments that are out there, UVXY. Those are a little bit harder to trade because most folks don't understand how they're priced out. But in any event, you want to be looking at short vol when you get the vol like that. Now, I will put it on a, let me just show you, just even back in 2007, you can see here, right in this area here, where that 1 day event, right in that area there, And then we haven't seen that since back in that area right there. Okay, that was in 2009, right around March of 2009 when we at the lows of S&P. Okay, the S&P futures at 669 or something like that, 666. Right in this area there was the peak. Now this is a daily chart, but on this daily chart, I want you to look here and see that we started from the same levels, but it took almost 2 weeks to get up into this area here. And to get up to this area right here, right, which was the peak that we had this past August, right here, to get from down here to here, it took about 2 weeks as well. Now over here, that's 2 weeks. So let's call it 10 days. Over here, we did this in 3 days. That's what flushed a lot of people. A long slog over a 3-month period is easier for folks to play and adjust and play catch up. Right here, you have no time. It's just bing, 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 and you're done. Right? It's just you're done. And panic sets in. Right? Now, panic was setting in here, but it was a gradual panic. And for those that know how to trade this environment, you did very well. Right here is the kind of environment where you have to be prepared for it before it hits. Otherwise, you're just not going to have much time to react at all. But for us, we were shorting volatility generally. And we were playing some of these things, and we saw it coming, or at least I didn't see that a vol, quite frankly, moving that fast in 3 days, but we did see the down move coming. But you can just see just how crazy this thing went in a 3-day period. Now, where's vol going to go from here? Again, it concerns me that looking at the November volatility futures, it was up almost 58 cents, right? And if we look at this daily chart of vol futures, let's put it on a 30-minute chart so you can see here. You can see here that when the markets opened in the morning on Friday down here, we did nothing but go up, and we finished near the highs for the day. Okay. Now, granted, we had a lot of vol come out of the market, and we did very well right here. But then on Friday, on a strong day, the markets opened up very high, and then they sold off some, but they still closed up, fairly nicely. Vol was moving up. So that tells me that the markets are still, there's a big degree of nervousness in the market still, looking out beyond October into the month of November. Now, traditionally, November is a better month than October, and then December is a great month for the markets. We get what's called a year-end or Santa Claus rally, I think is what they call it. So we've got to watch this very closely to see how this thing is going to shake itself out. Now, we've got a lot of things going on in our membership. We're having a lot of new folks coming in from Asia Pacific area, from Europe, from the US. I highly encourage you to come in and check us out. We've had a really good year this year in the markets, commodities, currencies. I think next year is going to be even better. We got some great things getting ready to set up. Now, I am going to do a live webinar on December the 5th. Mark your calendar, starting at 9:30 in the morning. New York City time. I know we got a lot of folks from Asia Pacific, as I said, as well as from Europe and the US, of course. It will be recorded. It's a free event for you. I'm going to highly encourage you to attend that event. We're going to look at the year. We're going to look at some strategies that we've been doing, and we're going to just do a kind of a first blush look at 2016 and possible opportunities for 2016. And we're also going to take a look at some of the currencies and some of the things that are going to be coming out next year that I think are going to be interesting to play. For a lot of our New England members in the New England part of the United States, we're also going to do this on site. So I'm going to try and broadcast this from a setting located here in Connecticut near New York. city. So you guys will be getting a meeting note on that as well. All right, everybody, have a great weekend. If you're not a member, I highly encourage you to come in and check us out. But enjoy the weekend, and I will be in touch with you guys soon. Members, I'll talk to you this Sunday night. We'll take a look at what's coming up for this coming week. Have a good one, everybody. Bye.